Hi, this is Mike Larson for Money and Markets TV. 2011 was an extremely tumultuous year, but I expect even more volatility in 2012, and that's mainly because the problems that hammered the markets last year haven't gone away, and the list of new problems is getting even longer. Last year, I predicted that European leaders' attempts to fix their debt problem would fail. I said we would see a broad slowdown in the global economy, and I told you that many stocks would struggle. All those predictions came true, and there's no reason to expect that things are going to get better this year. In fact, I believe things are going to get much worse in Europe. Look, policymakers there have already thrown everything they've got at the sovereign debt crisis. They created 2 large bailout funds. They engineered a second Greek rescue package when the first one failed. They poured money into sinking bond markets in Italy and Spain. And finally, they propped up 523 banks with 489 billion euros in cheap 3-year loans. But the underlying problem remains. European banks and European countries still owe too much money to too many creditors, and they have neither the capital nor the income to sustain those debts. As a result, the money from last month's long-term refinancing operation isn't circulating through the Eurozone economy like policymakers hoped. And a key manufacturing index just showed the 5th straight monthly contraction. Meanwhile, the leaders of Germany and France are gearing up for yet another Fix Europe summit, and a gathering of all 27 EU leaders is scheduled for soon after that. Now ask yourself, if things were really fixed over there, would we need meeting after meeting even in 2012? Now, if Europe were the world's only problem spot, you might be able to shrug it off like Wall Street traders tried to do late last year. But unfortunately, the rest of the world is heading downhill too. The emerging markets that let us out of the wilderness after the last downturn will not be able to do so again. That's because their own economies are slowing sharply, and because countries like China are facing serious real estate problems akin to what the US faced a few years ago. Meanwhile, our own economy is still hamstrung by an anemic housing market, a relatively lackluster job market, and weak income growth. Plus, the risk of another downgrade to the US's sovereign debt rating is rising sharply, thanks to political gridlock in Washington, a continuing surge in our debt load, and the trillion-dollar-plus annual budget deficits we're running. Amid all this uncertainty, I expect the euro to keep sinking into the abyss, propping up the dollar. That will actually hurt contra-dollar assets like stocks, high-risk bonds, and commodities, as investors are forced to close out the highly leveraged carry trades that help prop those assets up. But there are ways to profit from these trends by using investments that are designed to rise in value when select asset prices sink. I'm Mike Larson for Money and Markets TV. Thanks for watching.